What's going on, investors? Welcome back to the channel. Let's talk about what happened in the stock market this week and what we should be expecting next week. Is this the beginning of the end of the stock market? Are we going to be seeing lower low next week or not? Because we have a lot of things that are presently going on in the stock market. So
what up investors, it's your boy Dayo. Welcome to Frunkla Investment, where I talk about Bionano Genomics on a daily basis. From Sunday to Sunday, I try to post at least one video. Always do your own due diligence. Don't sue me, bro. Let's get to it.
now I'm going to be starting with the Nasdaq 100. Okay, unfortunately, this is just the Nasdaq composite. It went down almost 4% today, but finally it closed minus 3.8%. And why is the Nasdaq down? You guys know that whenever the Nasdaq goes down heavily, the likes of Bionano Genomics, even though Bngo doesn't belong in the Nasdaq yet, just in the Russell 2000, always go down. Whenever the Nasdaq 100 goes down, it takes most of all the stocks with it. And another reason is because Bionano Genomics is of course a small cap stock, and if large cap stocks, the likes of Tesla, Apple, Microsoft, if they go down, you should expect the likes of Bngo to follow suit. So that is literally what is going on right now in the market. I mean, it has little to do with Bionano Genomics, but everything to do with the entire market, okay, the macro and microeconomic. Now that is the first thing we're going to be starting with. Now, what happened today in the stock market? The reason why the market went down today is we have two main reasons why the market went down today. The first one is because the job data came in today, and according to the report, the US economy added about 263,000 jobs last month alone. In September, the estimate was that analysts were expecting the jobs that will be added to be just 255,000. But I mean, this is more or less a good thing, but for the market right now, this is a bad news. The situation of the market right now is more or less like we are waiting for bad news to happen, not good news. So this is a good news that the US economy is adding more jobs, but for the stock market, it is bad news. And the reason why this is bad news for the market, I'm still going to be sharing it with you guys in just a couple of minutes. Now, another thing is the unemployment rate came in and it keeps going down. Okay, it came in at 3.5%. Analysts were expecting 3.7%. Okay, and that's of course a good news. And right now the market expects bad news. Okay, the market expects the unemployment rates to keep increasing, not decreasing, and they want the added jobs to be decreasing, not increasing. So that's of course one of the reasons why the market went down today. Now, the second reason why I believe the market also went down today is of course the oil. Okay, oil went up almost $4. I mean, about $4 today, and that is of course is more or less like a breakout. And I think investors are worried that inflation, if oil prices keeps going, energy cost is going to increase. If oil keeps going higher, it means inflation could possibly get back to where it was, okay, like 5 months ago. And investors are worried that if oil price keeps going higher, it means we should be ready for the Fed to keep hiking the interest rate, because they want to bring inflation down to as low as, let's say, 2.5%. Now and also yesterday we saw that breaking news that OPEC is going to be cutting about 2 million barrels per day. I mean, you would expect OPEC to keep increasing production, but right now they want to even cut production even deeper. Okay, they want to make sure that the price of oil keeps increasing, or at least consolidate at where it is right now. They don't want the price of oil to go down. And that's of course bad for inflation. Okay, if oil keeps increasing, you guys should expect cost of energy, cost of most of everything to keep increasing, and that is going to force the Fed to keep their hawkish stance. Okay, they are not going to become dovish. They are going to keep trying to bring down inflation, trying to increase interest rates as high as possible. And the target right now is that the Fed is going to stop increasing interest rates when we get to about let's say 5% or 4 point something percent. But if the price of oil keeps going higher, it means the Fed is possibly going to hike the rate above 5%. Some are even right now predicting that the Fed is going to stop maybe around 5.5% or even closer to 6%, which of course is going to be catastrophic. Now let's talk about what you guys should be expecting next week. Okay, we have the CPI data coming in next week. Okay, the October 10th to October 14th is going to be a very, very interesting trading week, okay, for investors. Very, very interesting investing week. Now we have the CPI data. It's going to come in on Thursday. Okay, the September CPI data is going to come in on Thursday, and according to some analysts, they are expecting it to even come in hot. Okay, investors will get more clarity about inflation with the consumer price index for September on the agenda. CPI declined on a monthly basis in August, and investors are hoping for more of the same in September. But some investors, of course, are predicting that CPI is going to come in hot. And you guys can see the result. I mean, the Nasdaq went down today almost 4%. Oil went higher today, adding about $4, and that is of course crashing the stock market, and it crashed the markets today. And also today is Friday, so some investors mostly take profit on Friday, so that they are not going to be, perhaps something terrible could happen over the weekend, because we still have war going on right now in Europe. We have Ukraine versus Russia, and nobody knows what's going to happen overnight, about all this annexing territories and so on and so forth. So that, of course, I believe drove the stock market even much more lower today, okay, pushing the Nasdaq down about 4%. So you guys should be ready for next week, okay. If the CPI data comes in hotter than expected, then it means this is the beginning of the end, okay. I mean, it means the stock market is literally going to even go way down, okay. If the CPI data comes in hotter than expected, it means the Fed are going to be hiking interest rates. Right now, the prediction is that Fed is going to be increasing the rate by about 75 basis points. But if this CPI data comes in hotter than expected, then 100 basis points is going to be back on the table, okay. 50 basis points is already out, okay. And so right now we are just waiting for the Fed to hike it by 75 basis points. So yeah, now let's quickly take a look at Bionano Genomics and what happened today. All right, guys, so shares of BNGO today went down minus 8.3%. We closed the day below $2. You guys already know that $2 is a very strong level, okay. Right now it has turned into a resistance back to resistance, okay. It was support for like couple of days when we broke above it. Right now we are back below this level, and it's not good, okay. It is not good. If we get back below $2, you guys should expect that we are going to be struggling, okay, to get back above that level. The only thing that can at least help us is if we open with a cap up next week. But the market closed below $2 today, and you guys can see what has been going on. There was that massive breakout that we were happy, this breakout right here. And another thing is, if you take a closer look at this, the candlestick pattern, it looks more or less like we are coming back to retest this line right here, okay, this trend line right here. It looks like we came back to retest it, and that is another positive thing, okay. In terms of technical analysis, it looks like we are going to retest it, and then the uptrend can continue, because it is mostly common whenever there is a breakout, the price mostly comes down back to retest the trend line, okay. If after turning the resistance into support, it will come back and retest it, and if the support is strong, the price will continue the uptrend. So that's more or less how it is. But if we open next week, okay, below this trend line, if we open next week and we get back into this range right here, then you guys should expect that the sell-off may continue, okay. We could easily come back and retest $1.75, and then perhaps form a triple bottom, or nobody knows what's going to happen. We just have to wait and see, because next week Thursday we have the CPI data coming in, and yeah, so that is that about that. This video is a very short one. See you guys in the next one. I remain your boy Dayo. What are you guys doing? Let me know in the comment section. Do you think the market is going to keep going lower? Do you think this is the end of the sell-off that we are going to experience this month? Do you think fourth quarter is going to be a very solid positive one? Because according to some experts, they believe that fourth quarter should more or less provide us a relief rally. Okay, of course there was a relief rally, and unfortunately it has ended because of the job data that came in. Okay, unemployment rate keeps dropping and dropping and dropping. Oil prices, getting back is right now it's around 92 US dollars again, and so that is not helping the market at all. Let me know what you guys think about this. I remain your boy Dayo. This is Frunkla. Consider subscribing if this is your first time on this channel, and if you want to see what I'm doing, feel free to become member of the channel so that you can see all my other posts. And it costs about 99 cents per month to become member of the channel. Have a wonderful weekend. See you guys in the next one. Ciao ciao.